Welcome to this session on budget analysis. In the previous session on budget analysis, an overview of general government sector of the economy was given along with the format of the budget documents required for estimating macroeconomic aggregates pertaining to general government. We have also discussed the distinction between administrative departments and departmental enterprises. In this session, we'll understand the meaning of the budget analysis. Then we'll see the economic classification and purpose classification given to a government transaction as recorded in the budget document. We'll also define the output of general government and government final consumption expenditure along with related macroeconomic identities. By budget analysis, we mean that every transaction against an accounting head in the budget document has to be marked with an appropriate code according to some classification adopted for the purpose of compilation of accounts of general government. Therefore, every government transaction is given two classifications. The first classification is the economic classification, which gives the economic character of the receipts and expenditures. That means we need to classify a transaction as a salary or a transfer, or it may be a capital transfer, etc. The second classification is the purpose classification, which shows the purpose served by the government transaction such as health, education, agriculture, defense, etc. These two are combined to form economic cum purpose classification. The receipts and expenditures are classified as revenue and capital. Revenue receipts include all tax and non-tax receipts, while capital receipts are sale proceeds of government assets, including those realized from disinvestment. By revenue expenditure, we mean expenditures that are reoccurring in nature and are supposed to be met out of revenue receipts, including transfer payments. Capital expenditures are the expenditures incurred on acquisition of immovable assets, machinery and equipment, and government equity investment. The receipts are further divided into categories like taxes, sales, property receipts, interest, etc. The taxes like corporation tax, taxes on income other than corporation tax, taxes on wealth are classified as taxes on income and wealth. The taxes like GST, union and state excise duty, customs duty, service tax, sales tax are treated as product taxes, while taxes such as stamps and registration, land revenue, taxes on pollution are treated as production taxes. Non-tax receipts include sale of goods and services, property receipts from rent, dividends, profits, and miscellaneous receipts. The non-tax receipts also include interest received, transfers, and commercial receipts from sale of water, electricity, timber, etc. Interest and transfers may be received from central government, state governments, local bodies, foreign governments, or non-government bodies. Pension contributions, withdrawal from funds, sale of second-hand assets, sale of land, and sale of financial assets are also treated as receipts. We shall now discuss the economic classification of items in the expenditure side. Salary, wages, and allowances includes pay of officers and establishment, honorarium and allowances, excluding travel and daily allowances, wages to different contractual employees, medical charges and reimbursement of medical expenditure, cost of textbooks to the children of low-paid government employees. Other benefits like LTC are treated as benefits. Payments in kinds such as cost of liveries and uniforms, ration supplied to police and defense personnel, etc. are treated as benefits in kind. Pension payments to government employees as well as employers' contribution to the pension fund are treated as pension. Together, salary and wages, pensions, and other benefits comprise the compensation of employees of the general government. The intermediate consumption includes the expenditure on purchase of goods and services and expenditure towards maintenance and minor repairs of buildings, roads and bridges, and other constructions. General expenditure such as office supplies, rent, rates and taxes, advertising and publicity, fuel and lighting, printing, travel expenses, telephone and telegraph charges, and other items for current operations are marked as purchase of goods and services. Another expenditure made by government is on the subsidies. According to SNA 2008, subsidies are the current payments that government units make to resident producers or importers to influence their levels of production, the prices at which their outputs are sold, or the remuneration of the units engaged in production. Subsidies are not payable to final consumers. Current transfers that government made directly to households as consumers are treated as social benefits. A subsidy on products is a subsidy payable per unit of a good or service. Some of the examples are food subsidy, petroleum subsidy, and fertilizer subsidy. On the other hand, subsidies on production are subsidies that enterprises receive as a consequence of engaging in production but that are not related to specific products. For example, subsidies to railways, input subsidies to farmers, subsidies to village and small industries. Another point to be noted here is that in the case of departmental enterprises, losses are treated as imputed subsidies. As per SNA 2008, a transfer is a transaction in which one institutional unit provides a good, service or asset to another unit without receiving any good, service or asset in return as a direct counterpart. Transfers are of two types: current and capital transfers. Current transfers directly affect the level of disposable income and should influence the consumption of goods or services. In practice, capital transfers tend to be large, infrequent, and irregular, whereas current transfers tend to be comparatively small and are often made frequently and regularly. Government purchases bicycles, televisions, and other articles and gives to individuals. Government provides food, shelter, blankets, medicine, and other items to victims of war, flood, earthquakes, and natural calamities. All these transfers are called transfers in kind. An important point to be noted here is that transfers in kind are part of government final consumption expenditure but not of intermediate consumption. Gross fixed capital formation comprises of the expenditure on the acquisition as well as own account production of fixed assets. The assets have been classified into buildings, roads, land improvement, other constructions, transport, machinery and equipment, ICT equipment, cultivated assets, animal stock, software, research and development, and other intellectual property products. The gross capital formation includes the expenditure on these assets, that is GFCF, and the expenditure on purchase of second-hand assets and land and change in stock. Other expenditures of government include interest payments, advances, purchase of financial assets, and deposits and creation of funds. Now let us take some examples to illustrate the economic classification given to the transactions in the budget documents. Here we have taken a snippet from a budget document and will see the marking of item against each object code. Clearly, the salaries, overtime allowances, and expenditure on medical treatment are part of compensation of employees. Overtime allowances are treated as other benefits in cash, while expenditure on medical treatment is treated as social benefits in cash. The expenditure on travel expenses, office expenses, professional services, and other charges are marked as purchase of goods and services and goes into the intermediate consumption. Let us take some more examples. Here, the recipient of grants is an autonomous body, thus grants in aid general and grants in aid salaries, which are payments of current nature. So, these are marked as current transfers to autonomous bodies, while grants for creation of capital assets is treated as capital transfers to autonomous body. In the next example, we have subsidy paid to levy sugar and import of sugar. Since this subsidy depends on the volume of sugar levied, it is treated as product subsidy, and the subsidy towards the development of khadi, village and coir industries is treated as production subsidy. Next we shall understand the concept of purpose classification. The expenditures in the budget documents recorded under an accounting head are given a purpose classification to identify the purpose served for which this expenditure is made, such as health, education, agriculture, defense, etc. The purpose classification is consistent with the classification of the functions of government as recommended in GFS Manual and System of National Accounts. The expenditures shown under accounting heads in budgets are not strictly in accordance with the principles of purpose classification. The expenditures under various heads are not confined to any purpose category. In other words, there may be more than one purpose classification under one head. It becomes therefore essential to classify expenditure under each head according to purpose. The purpose classification is given to all items of the expenditure, excluding expenditures of departmental enterprises and expenditure on interest, inter-account transfers, funds and pension. In the classification of the functions of government, the functions are classified according to 10 broad categories at the first level, referred to as divisions. Within each division there are several groups, and within each group there are one or more classes. For details, GFS Manual 2014 may be referred. The purpose categories used by National Statistical Office are listed, and it may be noted that the codes are used by NSO for the sake of convenience. Now let us take an example of accounting head 2210, which is medical and public health. Depending upon the minor head, subhead and detailed head under this major head, purpose classification is given. For strengthening of health information and monitoring systems by CBIH, the purpose is given as 1.1.2, that is planning and statistical activities. Contribution to International Committee of Red Cross Society is given purpose as 1.1.3. The main institute of medical college is given purpose 3.2.3, that is higher education and university education. The headquarters of Directorate General of Health Services is given purpose 4.1.1, that is administration, regulation and research of health affairs and services. Setting up of CGHS dispensaries is given purpose 4.2.1, that is health services not elsewhere classified. Let us take another example. Here also, looking at the information of subhead and detailed head, the purpose code is given as 7.1, that is art and cultural affairs and services. As per System of National Accounts, output of government services is classified as non-market production. That is, the output is not sold at economically significant prices. Thus, the output is valued at cost. The output of general government is the sum of compensation of employees, which is the total salary, wages, pension and other benefits, plus intermediate consumption, which is the expenditure on purchase of goods and services and expenditure on maintenance, plus consumption of fixed capital. It may be noted here that the estimates of compensation of employees and intermediate consumption are obtained from the analyzed budget documents, while the estimates of consumption of fixed capital are worked out separately. The net value added of general government is the net value added from administrative departments, which is the compensation of employees of the administrative departments. The gross value added is the sum of net value added and consumption of fixed capital, and thus the output is derived as the sum of gross value added and intermediate consumption, which is the total expenditure of administrative departments on purchase of goods and services and on maintenance. The industry-wise net value added from administrative departments can also be worked out depending upon either the accounting head or purpose category. The net value added from departmental enterprises is the sum of compensation of employees, rent, interest and profits of the departmental enterprises. Gross value added is the sum of net value added and consumption of fixed capital. And output is the sum of gross value added and intermediate consumption. According to SNA, government final consumption expenditure consists of expenditure incurred by government in its production of non-market final goods and services and market goods and services provided as social transfers in kind. Thus, GFCE can be derived as the total output of general government minus receipt from sale of goods and services plus the value of goods and services purchased to be provided free to households. The government final consumption expenditure consists of expenditure incurred by general government on both individual consumption goods and services and collective consumption services. By collective consumption services, we mean services provided simultaneously to every member of the community or to particular sections of the community. For example, defense, police, external affairs, and justice. And the individual consumption goods and services are the goods and services provided by the government whose real consumer is identifiable and the ultimate benefit of which falls to households and their members. For example, health, education, recreation, and social protection.